Okay guys, welcome to my YouTube channel. Make sure you have a pen and a book with you there. Today we'll be focusing on only two things. First, smart money concept plus its abbreviations, guys. Secondly is the smart money definition plus chart. I know many of you are interested in growing your knowledge about smart money concept. You always ask yourself why on some other traders chart, what do you see the abbreviation BOS, OB, MSS, FVG, or maybe you see the dollar currency, or just a capital letter or small letter X. Okay guys, as you can see, smart money concept is in short is SMC, guys. Then BOS in full is break of structure. OB in full is order block. MSS in full is market structure shift. FVG in full is fair value gap. Then liquidity in short is just X, or maybe we'll see the traders return the dollar currency, the three triple S, guys. Okay, let's go to number 2, the smart money definition plus chart, guys. Before we get into it, I wanna first start with the market movement. Okay, we have three types of market movement, guys. It's an uptrend and a downtrend and a ranging market, guys. So we are going to focus on these two, the uptrend movement and the downtrend movement. Okay, how can you see a downtrend movement? How can you see this is a uptrend movement? Okay, let's start with the uptrend movement. In order for you to see that this is an uptrend movement, it must have higher highs and higher lows. Then in order for you to see that this is a downtrend movement, it must have lower highs and lower lows. Okay, as you can see that here the market has a higher low, and then this higher low goes up and create this higher high, and then this higher high push down to create this higher low, then this higher low push up to create a new higher high, and then this new higher high push down to create a new higher low. So everything in an uptrend must be higher than the previous high. As you can see, this higher low is higher than the previous higher low. This higher low is higher than the previous higher low. This higher high is higher than the previous higher high. Okay guys, let's go to the downtrend. As you can see on the downtrend, we have lower lows and lower highs. Okay, you see the market has a lower high there, and then the lower high push down created a lower low, then this lower low push up to create a lower high, and the lower high push down to create a lower low, guys. Okay, on a downtrend, the low must be lower than the previous low. That's how we see that, guys. Now we are in a downtrend. As you can see, this lower high is lower than this one. This lower high is lower than this one. This lower low is lower than this one. This lower low over here is lower than this one. Okay, now let's go back to the smart money definition plus chart. We're gonna start on the uptrend again. A break of structure. What is a break of structure? A break of structure is when price sets a new high or new low while breaking the former ones. As you can see, this high low created this higher high, this new level of a higher high. This was the first higher high that was created, and then this higher high created this higher low, and then this higher low push up, creating a new price of a higher high. When this new price of a higher high was created, it broke this level of a higher high. So if it broke this level of a higher high, it means that this is a break of structure, because this level has been broken. It's no longer the high that we have. A new one has been formed. So the previous one is going to be a break of structure. So guys, in order for you to mark this word break of structure, or maybe BOS, you must have a higher that is higher than the previous high in order for you to mark it as a break of structure. You cannot mark this high over here as a break of structure, because there is no high above it. This is the last high. I hope you understand, guys. If you don't understand, you can comment. There's a free Telegram group where I will add you guys. It's free. Make sure you hit like and subscribe. Now let's go to the downtrend. As they say again, a break of structure is when a price sets a new high or a new low while breaking the former ones. How do we see a break of structure in a downtrend? Okay, as you can see, the market is a lower high and it decides to push down, creating a lower low. This lower low created a lower high, and then this lower high pushed down and create a lower low while breaking this lower low. This lower low was the first low that we had, and now we have two of them. So this means is the former low. So if this is the former low, we're gonna name it as a break of structure, because this level of a low has been taken out, a new low has formed, guys. So that's how we name this a break of structure, because this level of the previous low has been taken out. In order for you to mark it as a break of structure on a downtrend, the new low must be lower than the previous low. That's how we're gonna mark this one as a break of structure. As you can see that this low here is lower than this one. That's why we mark it as a break of structure. Okay, number 2, it's an order block, guys. We're going to focus on order block now. Okay, what is an order block? An order block is where market orders are taken from. When I say market orders, I'm talking about the buy and sell, because that's what we do in trading. We buy and sell on. As you can see here, the order block must be low, because we buy low and sell high. Okay, as you can see, the market pushed high and created this high, and then pushed down and created this low, and the market pushed up again, created this high and pushed down, created this low. Okay, where do you put your order block in an uptrend? You put your order block on your higher lows only, guys, because you buy low because you want the market to push high, and you sell high because you want the market to push low. Okay, as I said, that on an uptrend you put your order block on your higher lows. And where do you usually put your order block on your higher low? You look for the last bearish candlestick, guys. The last bearish candlestick. Let's take this was the last bearish candlestick. This one, you're gonna put this order block, guys. You're gonna go to your and take this rectangle thing and put it on your last bearish candlestick. You're gonna put this rectangle on your last bearish candlestick and mark it as an order block, because you want this market to come to this low so that you're gonna place your buy and then it continue pushing up. That's why they say in an uptrend that you buy low, because you want the market to push high. Okay, let's focus on a downtrend movement. How do you see, where do you put your order block in a downtrend movement? You put your order block in your lower highs, because in a downtrend movement you sell high because you want the market to push low. So the market was pushing down, created let me do this. Okay, let's put another one. The market created this lower low and created this lower high. Market pushed down to create this lower low and created this lower high. So as I said, that on a downtrend you put your order block in your lower highs, because you want to sell high, because you want the market to push low. Okay, where on your lower high do you usually put your order block? You put it on the last bullish candlesticks. You put it on the last bullish candlestick, guys. Let's take this. As I said, the market was pushing high, so it's going to have a lot of bullish candlesticks. Then on this lower high, you look for the last bullish candlesticks that was formed, and you mark it only one candlestick, guys. Remember, only one candlestick. Okay, that's how you see your order block in a downtrend movement, guys. Number 3, we're gonna focus on a market structure shift. What's a market structure shift? Is when price movement change from buying to sell or selling to buy. As I said first, that how do you see an uptrend movement, guys? How do you see an uptrend movement? An uptrend movement must have higher lows and higher highs, and higher lows, guys. That's how you see that this is an uptrend movement. As you can see here, the market created a higher high and then it created a higher low, and then created a higher high, and then a higher low was formed. A new higher high was formed, but this higher high failed to create a higher low. This higher high failed to create a higher low, which is going to be higher than this previous higher low. Instead, it created a low. It created a low which is lower than this low. As I said, that you only, if a low is lower than the previous low, it means now you are in a downtrend. So you see, instead of a market creating a higher high, it created a lower low, and then this lower low created a higher high. As you can see here, that this lower low created a lower high, and then this lower high created a lower low that is lower than the previous lower low. So as you can see here, since this low is lower than this low, the market is a market structure shift, guys. Make sure you see at least 2 market structure shift before you say that now there's a market. You see that now there's a market structure shift that has occurred. As you can see here, the price was moving on an uptrend and then it changed to a downtrend, guys. That is a market structure shift. That is a market structure shift. Okay, let's go to the second market structure shift. So as you can see here, as you can see here, we're on a downtrend, and a downtrend has two key concepts, which is the lower low and the lower highs. That's how we see that now we are in a downtrend, guys. We must have a lower low and a lower high, and then this lower high created a new lower low, which is lower than the previous lower low, and then this lower low created this lower high. And then this lower low created a new lower high, and then this lower high created a new lower low, and then this lower low failed to create a lower high. Instead, it created a high that is higher than the previous high. And I said it that if something is higher than the previous high, that means now we're in an uptrend, guys. As you can see over here, now this high is higher than this previous high. That's why over here, when this price or this level has been taken out, we're gonna mark it as a market structure shift. And then this higher high created a higher low. Now this low is higher than this low, and when I said that if a low is higher than the previous low, is an uptrend, and then this higher low push up to create this higher high. Now this higher high is higher than this previous high, so now we mark this as a higher high. As you can see that the market was creating lower low and lower highs. It was on a downward movement, and then sudden change and created higher highs and higher lows. That's how we see that now the market is in a bullish movement. I hope you guys understand me. If you don't, guys, please comment. Number 4, we have a fair value gap. What's a fair value gap? Is when price move quickly from one price to another. Often we usually see gaps in, especially if you are trading gold like CPI, NFP. That's where you usually see a lot of gaps. Okay, in order for you to see a fair value gap, okay, this is a fair value gap from the downside movement. The market must have at least 3 order blocks. As you can see over here, as you can see that there are gaps over here. You see this week. Okay, let me do this, guys. As I said that in order for you to see that this is a fair gap, you must have at least 3 candlesticks. Okay, as you see, this week ends here, and then this new week of the dead candle ends here. Okay, the fair value gap must be formed in between the first and the third candlestick. As you can see right here, there's a gap, guys. So market will usually push up to fill this gap and continue selling. I hope you understand me, guys. This is how you see a fair value gap. The week of the first candle and the last candle is the one that determines that there's a gap inside the second candlestick. Okay, on the fair value gap of a uptrend movement. This was a fair value gap of a downtrend movement. So as you can see over here, this week, as I said that in order for you to see that this is a fair value gap, it must have at least 3 candlesticks. As you see, I've written gap. There's a gap inside here, so market might come down to fill this gap, and then push up and push up, guys. Okay, make sure you hit like and subscribe. Thank you.